Hello, it's Wednesday the 2nd. I'm FxPlew and I'm back under the brolly for the market brief. Apparently there's a heat wave in Europe, but I guess the Brexit vote ruled us out of that fun. UK house prices fell by about 4% last month, which was the biggest fall since 2009 in the middle of the financial crisis. And it lines up with mortgage rates reaching a 15-year high. Interest rates make the affordability tests more difficult, making it harder to borrow as well as more expensive to do so. And that leads to a drop in demand, and just like the wider inflationary picture, where demand is dampened, higher prices can no longer be supported and they start to come off. Headline inflation fell to 7.9% last month, and food price inflation has reported to have peaked in the last couple of months. The cost of grains and vegetable oils in particular fell significantly, but that may take another knock. Russia has pulled out of the treaty allowing safe passage of grain carriers using the Black Sea ports, and has increased the assault on Odessa, Ukraine's largest port in the region. Back home, we have the MPC rate decision tomorrow, and it's still unclear if we'll have a 50 basis point rate hike or 25 basis points. But the pound fell away yesterday, suggesting bets will rebalance towards a 25 basis point hike. Over in the US, the Fed won't reconvene until September the 20th now. By then, inflation should have fallen even closer to their 2% target and will have been treated to 2 more non-farm payrolls reports. Tune in on Friday for the sweepstake. But barring any curveballs, the Fed look close to the finish line, and they are expected to pause further rate hikes for the time being. Perhaps we'll have one more further rate hike before year end, but that will be driven by the data. Ahead of non-farm Friday, the job openings number fell to 9.58 million. That was down from 9.61 last month, and it's in line with the cooling of the employment market. Payroll forecasts for Friday suggest less than 200,000 jobs will have been created last month. However, as there have been no big downside surprises to the payroll data during the rate tightening cycle, analysts expect nothing more than a moderate fall in the July data. Tune in on Friday to find out. In the market, where the future yield appeal is less for the dollar now, support is instead being found from the relative growth rates between the US and the rest of the G7. The dollar index rose to 101.90 yesterday as sterling slipped back to 127.40 against the dollar. We opened this morning around 127.65 against the dollar, about 116.20 against the euro, and euro dollar is around 109.90 this morning. That's it from me. Have a great day.
If you do not have a clue, then just tweet through and ask FxPlew.